What is happening, everybody? It's your boy, Sean McLaughlin, Options Sean on Twitter X. Today is September 21st, 2023. Hope you're doing well. This is the All-Star Options Jam session where we review anything notable in open positions that we have on, any exits that have taken place since we last spoke, any positions we need to keep an eye on, and any new positions. But before we jump into charts, we need to drop the old lawyer disclaimer here to let you know that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way. So, hey, it's been a wild day in the markets since a wild day and a half, or let's just call it a day, since the Fed announcement yesterday afternoon. No surprises out of the Fed, but for whatever reason, the market doesn't like it. And we've been trading down. This Russell 2000 chart here kind of shows it pretty clearly. And we had to exit a position in IWM. This was a position that we had a risk reversal on that we got in back on May 10th. We sold October 155 puts and used those puts, that credit, to finance the purchase of our long October 190 calls. On June 2nd, we were able to sell half of our calls and close all of our short puts. Did so for a credit. At that point, we had about a 50-cent net credit embedded in the trade, and basically we were holding the rest of our calls for free. So that's good. Worst case scenario is we walk away with a profit, right? The calls can expire worthless, and at least we walk away with that small profit that we had. Well, yesterday, IWM closed below our risk management level. We still kept the risk management level going. And we closed below it yesterday. So this morning, I sold the remaining calls. I got about 35 cents for them. So all in, we made about 55 cents on this trade all in. Where do I have it? Yeah, about 80 cents. We made about 80 cents all in on this campaign. Not the profit we were hoping for. Certainly when we were breaking out back in July, it's looking like this was going to be a huge winner. But hey, for a trade that ultimately didn't work, to walk away profitable, that's a good problem to have. That's a first-class problem. All right, next up is Snowflake, ticker SNOW. This was an iron condor that we put on back on August 28th. We collected $1.25 net credit for it when we put the trade on. Well, we hit our profit target on the 15th last week. Was that Friday? Friday of last week. We were able to get out at 60 cents, which is exactly where we wanted to get out, at half of our original net credit. So we are out of Snowflake, hit our profit target. Nice and easy. And finally, TLT. This one expired on Friday. This was a September 103 long straddle. So we were long the 103 calls and long the 103 puts. Well, the puts are what had value on expiration day. We got out of these puts for about 960, I believe was the 975 is where we got out. So we paid 625 to get in for the whole thing. We sold the puts. The calls were worthless. We sold the puts for 975. So we made what, 350 on the campaign? Not bad. Not bad. Considering we were actually, when we put this trade on, we thought we'd make money on the long side. But the market had other ideas, and we're not complaining. Again, a profitable exit, we will take it. All right. Got a few positions here that are on notice, meaning the market's been selling off since yesterday afternoon. And today we had 3 stocks hit below our stop loss level, or our risk management level. Now, I like to wait for closing prices, okay? So I want to see where these things close today. And if they close below these levels, then I will be looking to get out tomorrow morning in the early going. But right now, KB Homes, this is the good news on this one, is that this is a long call position. We already sold half back on May 29th, so we're free riding on this position. So whatever we sell our remaining calls for, whatever we sell them for, it's pure profit, okay? Hopefully we don't have to sell them tomorrow, but if we close below 48 today, then I will be exiting KBH tomorrow, my remaining position. Pulte Homes, this is a iron condor that we have on with October options. And as you can see, it's below our risk management level currently, below 75. If this thing closes below 75 today, then I will be looking to exit this spread, win or lose, tomorrow at the open. It's possible I can win, but likely it'll be a loss, and that's okay. And finally, GXO. GXO is a position. Let me see. Let me get my notes here. We're long a January 60.75 call spread that we paid 5.25 for. Well, 57.50 is our risk management level. We are currently below 57.50. So if GXO closes below 57.50 today, I will be exiting our January bull call spread to protect against any further losses in these positions. Now, none of these trades should be KBH is already guaranteed profit, but PLT and GXO, they should be manageable losses if we get out. In both cases, our risks are defined, so we should be all right. All right, let's update some stops here. Honda Motor Corp, we've been riding this baby since May. This thing's just been doing nothing but screaming higher for us. It's pulling back today like everything else, but we've moved up our stop loss level now to 32. We're long the October 30 calls. So this one, we're starting to get into close to expiration. So pretty soon we'll really tighten up our risk management. But for now, our stop loss is at 32, which is pretty far from here. But even if we get out at 32, we'll be booking profits on this thing because we're long the October 30 calls. All right, next stop that we're updating is TAL, T-A-L. This is TAL Education Group. We're long the October 7 calls. We got into this on July 13th. We've just moved our stop up to 650. We want to see it hold 650. If it doesn't hold 650, we'll be getting out. But likely, this also is an October position, so probably in a week or so, we'll start aggressively tightening our stop on this as we get closer to expiration. And if it's not above 7, once we get into October, we'll just pull the plug on it anyway because theta's working against us. But right now the calls are in the money, so we'll let it dance. Next up, BTU Energy. This is another one we're raising our stop on. We're long the January 25 calls. I've moved our stop up to 21 now. We're comfortably above it at the moment, but this level of support here, we don't want to see this broken. If this breaks, then that probably tells us that we're on the wrong side of this trade. But BTU, the January 25 calls we bought for $1.60, we're moving our stop up to $21. And finally, I think this is the last stop update. Our interactive brokers position, we got into this on July 28th. We bought the 100 strike calls for $2. It was looking really, really good, but it has since faded like everything else. But we've moved our stop up to 88. Any close below 88 is our signal that interactive brokers looks like it's topped and wants to roll over, and we're going to want to get out of that trade. All right, so these remaining trades here, all the details for these trades are on our website, allstarcharts.com. Go to the options member section. You can get all the details for the trade plans. I'm not going to get into the details here, but just if you haven't seen these yet, take a look. We're in a delta neutral credit spread in Merck, MRK. We got long MasterCard, MA. And we got long Next Gen Energy, ticker NXE. Again, all the details for these trades can be found on our blog for subscribers. NXE is a free post, so if you're not a subscriber to All Star Options, you could still see the Next Gen trade. You can find the details on our website, so please check that out. And if you are not a subscriber to All Star Options and would like to become one, shoot us an email, info@allstarcharts.com. We'd love to get you involved. You could even try it for free. All right, guys, that's all I got for you this week. Hang tight while the market sorts itself out post-Fed. Have a great rest of your trading week. Have a great weekend. We'll talk again next week. Take care, everybody.